At the last minute of the market today, 3:59 p.m., we detected the biggest options trade on AMC stock today, May 13, when the stock rallied 78%. One of the best days in years for AMC stock. So in this video, we will analyze this data to find out how this wealthy investor is trading AMC. Is it bullish or bearish? And based on this unusual option activity, we will show how we are trading AMC stock options. So without further ado, let's dive into the data as usual. So on the option time and sales tape, we can see these options expire May 24, 6.5 strike calls, 3,722 contracts. And we can see the price that they transacted this trade at, 95. It is closer to the bid. Okay, so it is possible that they sold it. Now, when we take a look at the trade for the May 24th, we can see these are clearly opening trades because at the 6.5 strike calls, we have 25,000 contracts being traded. That's much greater than the open interest of just 2,600. And that's why they're opening trades, where we believe they are selling the 6.5 strike calls. And so when we analyze this trade, you can see this trade here, which appears to be a bearish trade because it does have a negative delta of 56. If it was positive, it would be a bullish long trade. But since it's negative, you can see that the profits increase if the stock price goes down. However, based on our analysis of other variables, we believe that this investor has underlying shares in AMC stock, and what they were doing was selling call options, essentially selling covered calls. Okay, and so this is what it looks like, having 100 shares of AMC stock and selling a call option, taking advantage of the high volatility. Now also keep in mind, the stock price of AMC is not $6.42. That's what happened after hours. When they got into this trade, you can see that AMC was trading at 5.2 at the last minute of the market. Okay, so the shares, we would have to put the cost of those shares here, and you can see now that the break even of their trade now significantly moved down lower to about $4.28. So by selling these call options, they've reduced their cost basis, and they have a higher chance of being profitable now on this trade. Even if AMC goes down, as long as it's above this $4.28, they will be profitable. And so that's what they're doing, taking advantage of the very high volatility now. You can see the current IV percentile implied volatility, 100%. Okay, and when this is very high, that's when professionals sell options, okay, to take advantage of the high volatility. So by selling these call options, it does require about $700 of buying power per contract at the 6.5 strike calls. Since they did 3,722 of them, this trade does require a buying power of about $2.6 million. So keep that in mind. And by having those shares, That's what they're doing. So 100 shares of AMC at about 5.2 is about $520. And since they did 3,722 contracts, it's also about $1.9 million. So this is all about the price that they need. If they have shares, then they would just need 1.9 million. If they just did not have shares and they just sold the call options, they would need at least 2 million. So either way, this trade requires more than $1 million to put on. And that's why we know this is a wealthy investor trading at the last minute of the market. Now, how did we trade this? Because we believe that this was a covered call strategy where they are still bullish, you can see that this is a positive delta trade here. We are also going to go bullish. So our trade is right here. We sold the same 6.5 strike calls over here, but we also bought over here at the 5.5 strike calls. So we bought the 5.5 strike calls and we sold the 6.5 strike calls. And so when we analyze this trade, you can see that this is a vertical call spread. It only costs about $20 for each of these trades. And you can see that max profit will be shown over here as we move the mouse further to the right where the share price is higher, $80, right? So we're risking $20 to make $80. So the risk to reward ratio here, 80 divided by 20 is 4. So we could potentially make 400%. So the risk to reward is in our favor, and that's how we set up our option strategies, making sure the risk to reward is always in our favor and that we always trade in the same direction that the wealthy investors are trading based on our analysis. If you're interested to learn more about our strategies and the stocks that the wealthy investors are trading that have higher chance of profit in comparison to this trade here in AMC, then make sure to go to our website. We'll put a link at the top here. Because of this high volatility, it is a higher risk trade. So if you want the lower risk, higher profit trades, then make sure to go to our website. Let us know in the comments below what you think about this rally in AMC. Will it continue or will it crash? Please smash the like button, subscribe if you haven't, and have a great day.